Eric Mother with Mother.com. Let's take a look at the chart for X US Steel Group, and we can see here that it had a nice run off the lows of early 2016. Nice run here all the way to the highs of about 28, 27. So what I was looking at is technically what caused this high here, or how would have one been sensitive to the idea that somewhere around here it was gonna stall. Now from what I can tell is you have to go to the monthly chart. Now this is a 2-year weekly chart. If you go to the long-term monthly chart, then you start seeing why it stalled around that $27, $28 level. And so the first reason on the long-term monthly chart is if you take the highs of the RSI on the monthly and just something like that, you can see that at the highs around that $27, $28 area for 2016, this is where it stalled. Once it hit this line here, you can see it's pulled back since then. So that's one layer of resistance. Now the other line that shows resistance, confirming resistance at the highs of 2016, goes back to the break of 2008. This break in the RSI of these levels here is what was being tested. So what we do is we take this information. Every time we hit that line with uniform action, we know that it's a turnaround situation, and let's test that. You can see here we went above the red line and back below it with uniform action for the highs of 2014, and here we can see that we tagged that red line with uniform action, and since then we've been lower. So those two lines, in my understanding, is the reason why the stock stalled. And so until such a time that it can clear those two lines, we can see that the stock should generally be under some side type of downside pressure, or at least we can say the stock should be trading below the recent highs of 2016. So those are the reasons, for my understanding, why the stock has pulled back off the highs. And for now, short term, we can see that the challenge is whether it can hold the 50 level on the on the weekly chart. So on the weekly chart, if it can hold this level here and stay above the 50 level, maybe it has a chance of bouncing. The last time it bounced on the 50 level was here, which was this period here, and successfully the stock would go on to make a higher high. So what one would want to is continued bounce with uniform action on the 50 level, and at some point, if it can clear the recent short-term highs, so if it can move above these short-term highs on the weekly RSI, then maybe that's when one can get back for a move that could potentially take it to new highs. But for now, tough to tell which way it wants to go. Of course, we know why it stalled here around the $27, $28 area. Short term, again, the challenge is whether it can hold above this 50 level on its weekly RSI. For now, we can see for the most part looks to be sideways. So again, in summary, short term, bulls would like to see it move above the recent highs on its weekly RSI, which would suggest that it has found support on its 50 RSI level. Otherwise, anybody who wants to short this can just wait for momentum confirmation if it cracks below this level on its recent RSI lows on the weekly, because a break below that would suggest that failure to hold the 50 level has taken place and that the next meaningful swing trade is lower. So above the green line is bullish, below the red line would be short-term bearish. Eric Mother with Mother.com. As always, good luck, peace, and blessings. EACS.